having their biggest weekly fall in nearly a decade. Are investors selling indiscriminately just to raise cash? For more, Dariusz Kowalczyk, Chief Investment Strategist, CFC Seymour Limited Hong Kong, joins us. Dariusz, good to have you with us. Is this another leg of the sell-off we're seeing when you look at the heavy losses in Asia? Are we looking at indiscriminate selling where investors are just simply selling the good and the bad stuff just simply to get out of the markets?
It definitely seems so today. The market is clearly panicked. Investors who had suffered losses in other areas of the market, such as structured finance, where there is pretty much no liquidity, are trying to raise cash selling where liquidity exists, which is in the stock market, for instance. So we had huge losses. Also, the risk aversion means that all risky assets, commodities, equities are just being sold. And this maybe was the worst day in the current drop. I'm hoping so, especially given that the market really recovered here in Hong Kong by the end of trading.
And speaking of recovery, look at the yen, the Japanese yen. That yen is reaching dollar-yen level of 112. I mean, how much impact is this going to have on the Japanese exporters? As an investor, do you get out of the Japanese exporter segment?
This will have a huge impact if the strength in the yen is sustained for several weeks or months. But my bet is that the wild swings in the market of late will be at least partially reversed. So if the yen declines in the next few days or maybe weeks, then the impact on exporters will be limited. Otherwise, demand for Japanese exports will decline because they will simply become much more expensive at $112 yen, and this will hit both GDP growth and profitability of Japanese exporters. But again, it's very possible that we are near the bottom, both in terms of the equity markets in Asia and in terms of the exchange rate of dollar-yen.
Dariusz, I mean, how keenly should we be watching that exchange rate just to see how it impacts domestic investors in Japan? Because there are those who say you've got to watch it because if we're going to get a second leg, it could well come from them.
That's true. So far, when you look at what's happened in the past several years, we have experienced big and short-lived surges in the value of the yen, such as in February and March this year, in May and June last year. And it seems that the local investors have managed to ride the storm and remained sellers of the yen. Whether this will happen this time, well, the recovery of the yen is somewhat bigger in percentage terms than in those previous episodes, but I'm still betting that it will be short-lived and that there will be no major second leg, that the local investors will stick to their guns and will not buy back their domestic currency in Japan.
Well, Dariusz, Brian Shackman here in the U.S. Speaking of any second legs, of course, the sell-off in Asia begs the question, will Asian money start to exit the U.S. market?
I don't think so. A lot of the Asian investors who are long the U.S. market come from the various types of sovereign wealth funds, or basically central banks managing their reserves and putting some of their money maybe to the U.S. equities. And I think that those very long-term investors, while they may wait for the brunt of selling to pass before they jump in, I think they will take a longer-term view. And the longer-term outlook for the U.S. I think is very positive because valuations are fairly low. The forward-looking price-earnings ratio for S&P 500 below 15 is something that I find quite attractive, and I think that those managers from Asia will have the same view.
Dariusz, quick word about the Hong Kong market. A big bounce off the lows an hour and a half or so ago. Do you think authorities were sort of somehow coordinating a step in there?
Well, I don't think so, although you can't be sure at this point. One comment is that the Hong Kong market was very well supported at the $20,000 psychological level, and breaching that level might have simply brought new investors. So we will have to wait for any comments from officials, but maybe it was just a rebound from strong psychological support.
A very volatile day here in Hong Kong indeed. Dariusz, good to have you with us. Thank you very much for being with us. Dariusz Kowalczyk, Chief Investment Strategist, CFC Seymour Limited, Hong Kong.
Still to come on today's program as market turmoil continues. Is the Fed easing by stealth? That's a key question investors have been asking in the last 24 hours. Will